Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joe Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Thick on the show today. The earnings parade continues. We're going to recap the biggest moves, or the most notable moves, at least, from yesterday's session. Apple obviously hit the 1 trillion mark. Congratulations. So maybe we'll talk about Tesla's action as well. Our guest today at 8:35 will be joined by Joe Saluzzi. He is a market structure expert. He's the partner and co-founder at Themis Trading, and he has some very strong opinions on Bitcoin ETFs, and I hope we can get those thoughts from Joe at 8:35. Plus, we have our jobs number today. Don't forget that, 8:30. We're going to get the jobs number from the previous month. Joel, what is happening in the overnight session this morning?
Yeah, we're bouncing around pretty good here, Spencer. The SPOOs are up 3 points here at 31.50. Just made a pre-market high of 36 even, so that's a target on the upside. Really looking on a daily perspective here, we came down hard off 28.49.50. So if they really like this job number, recent high of the move, 28.49.50 could be a great target. On the downside, went below the close of 28.50, pre-market low 24.75. No downside until we take that out. Crude reversing a bit off yesterday's rally, down 27 cents at 68.68, finding resistance right near yesterday's high of 69.32. Gold continues to leak here, flat at 12.20.10. Silver up 5.5 cents at 15.44. And Bitcoin's going down here, folks. The Bitcoin futures are down 200 at 7,340. Dennis, we're getting a little choppiness in the market here in the SPOOs ahead of the jobs number. Just people jockeying, or did you see any news out there to cause this choppy action?
I didn't see a headline fly by here, but I could have missed it because I was just prepping the show. Spencer, did you see anything go by or ask the news desk there? Because you're right, we just sold off about
something.
Well, we sold off about 3-4 points here just in the last couple minutes.
I did see something. China is going to levy differentiated taxes on an extra $60 billion worth of U.S.
Trade
goods.
war continues. Well, that's the news. Trade war continues here. So, we're going to see headlines that feels like this every other day. Market seems to, be reacting in a less and less way, although we did have a pretty good reaction there a couple of days ago. Down a couple of points here, but, this market's starting to expect, new headlines here. Obviously, we're just basically out of trade war here. So Trump goes, China goes, Trump goes, China goes. Looks like it's going to continue that way for a while. So we do run headline risk. Remember your trade war stocks if you are trading them. Caterpillar, Deere, 3M, Lockheed, Boeing is another big one. Those probably more direct plays, and then obviously you got indirect plays too. But there's a lot of stocks that are affected by a potential trade war. We've covered them on the show before, so I don't want to go through all of them again. But we've got a lot of stocks to talk about here this morning. One stock that I did throw in my investment portfolio just a couple days ago. It looks like good timing on this one here. Kraft Heinz, KHC, reported earnings here, talking deal potential with Campbell Soup here as well. KHC trading up $4. You still got yours there, Joel?
Yeah. I
sold it out. I rebought it. And now, I don't know, I almost feel like selling out again. It gets back up to 64. Pretty good pop here this morning.
Spencer, I'll give the report, and I'll just break it down real quick technically for you.
The Q2 adjusted EPS for Kraft Heinz, $1, beat the 92-cent estimate. Sales $6.69 billion versus $6.59 billion. I think the consensus on this, as far as any M&A is concerned, is that they passed, and this is from CNBC, they passed on Pinnacle Foods. So the implication is that they would also pass on buying Campbell's.
Doesn't the stock go down if they buy Campbell's? Here it is trading up $4. It's an okay report, but if they're buying this because they might be buying Campbell's, I think if they were to announce an official deal, it would actually go down. It's a reason I don't want to own the stock to a certain extent. Campbell's is trading up on the rumors here again. The rumors have been kicking around here for a couple weeks now. Campbell's is just ticked up to 42.96, already coming back in, back offered at 42.50 now. It's 41.71, so you see it up 3%. It's actually only probably up about 2% and could be going lower than that too. So starting to give some of it back. But I don't know what to think on this, KT. I mean, that's a big pop.
That's a huge. I went last time.
Pop in one day. I mean, I just bought this like 2 days ago. So I'm like, I'm already up like 4 points in it, just like that overnight. This is a stock that you try to work 4 points out of over the course of a couple months. So it's hard not to ring the register on KHC here as a shareholder because it's a big pop.
It's a huge pop here. I mean, I'm not selling it on this. I mean, I'd probably hold this one for 5 or 10 years or something like that.
And that's it. If it depends on where you threw it. Like I put it, I've been trading it a little bit already. The food stocks, I probably should have one that I just throw it in a retirement account, never look at again. Maybe throw a little bit of it in there. But I threw it in my investment account, but it's one that I still trade. I never trade the like what's called Registered Retirement Savings Plan in Canada. I never trade those. When I throw something in the RSP, I just forget about it, put it on the lockdown, never look at it again. But I do trade, the longer term stuff sometimes. And when you get a big pop like that one day, holy cow, it's hard not to ring the register. I mean, think about what Kevin O'Leary was saying yesterday on CNBC. He bought the Apple right before the print, and boom, it's up 15 points for him in 2 days. And he's like, how do I not book some of that gain? Sometimes you got to look at it that way. I mean, I guess you got to have your time horizon when you enter the trade, obviously, and then going from there. But holy cow, it's a big move really fast.
Okay, yeah. Well, your pre-market high 64 even. I would use that as a target right now. That coincides with your July 16th high of 63.99, and then series of highs in the 64 handle. So, even if it does bust through there, I don't see it getting to 65 today. Very hard to identify support here when a stock is up this much. But I will tell you that after nicking 64 there, someone stepped up at 62.60. So those are your early parameters in KHC, 62.60 to 64 even.
Other stocks report last night. We had both gaming stocks report. So you had Activision Blizzard reporting and you had Take-Two. Let's go to the TTWO one first because it is in blast off mode here. We know the esports stuff is hot. We know gaming is hot. It seems like every time these stocks pull back, it's just buying opportunities. Take-Two pulling back 12 points in the last 4 trading sessions, getting it all back in one foul swoop. Here we are. We're back up at all-time highs. Take-Two. I mean, these stocks just have eternal bids below. And I've talked about these, and I said, these things will be making new all-time highs by the end of summer. They beat that target pretty fast because they made new all-time highs by middle of July. I still think these things have eternal bids below them. I think they continue higher.
All right, I'll give you the numbers. The Q1 EPS for TTWO, 62 cents versus 56 cents in the same quarter last year. Sales of just under $388 million versus $418 million in the same quarter last year. I would also caution that TTOO, T2 Biosystems, they reported yesterday after the bell as well. So don't confuse TTWO with TTOO. Because they are both reporting earnings.
A lot of TTs and a lot of O's in there. Yeah, okay. So TTOO is trading up as well. Let's talk Take-Two, TTWO. Talk the technicals here, Joel. I mean, we had a wall of resistance up here at 128. But you're getting a running start at it now. It's flown up at it. If it takes out 128 and you're like a 130 and then above that, who knows? I mean, I guess resistance is resistance until it's broken, though.
Especially, what did they get hit on? It lost 9 points on.
Well, that's just the market
Monday.
Overall.
On Monday?
Yeah, but it was a bad day. It was also EA Sports.
That's right.
EA came out and disappointed, and they hit all the gaming stocks on it. EA's trying to bounce back a little bit there too. But there's another one. It's 150, 130. I bet you when we look at EA 2 months from now, I bet you it's and all depending on the market to a certain extent. I mean, if the market goes south, everything goes south. But if the market holds up, I can't see any reason why EA won't be back at 150 again.
150. Whoa, 150 here. I don't know. Overhead supply.
I'm not saying
here.
Today.
Okay, I know. That's
obviously I'm not saying today. It's not coming back there today. It's up $2. I mean, I'm saying these things. Do you not agree with me? I mean, we've had esports. Me and you have talked esports for a long time. The big 3 players in esports, Electronic Arts, Take-Two, and Activision Blizzard, it's not going away. So these things just have eternal bids below every time. Look at the chart. Let the chart speak for itself. Every time it pulls back 5-10%, within 3 months, 4 months, it's back at the highs. So what I'm saying is you're significantly off. It's going to take some work to get back there. But I think when I look at this thing, let's say if the market's, still kicking around the highs end of September, so going out 2 months from now, I think EA could be back at 150.
Okay, it's a hot sector. The trend is your friend. I mean, just as far as today's looking, your pre-market high stands at 128.15. You're looking at the dailies. You just see all those highs peaking at 128. The highest of those highs is 128.70. All-time high above that at 129.25. So, I mean, for me, if I own this stock, I'm a natural seller between 128 and 129. Blows, of course, 130. But that's just because I look at this big red bar right here, and the stock loses 9 points. And some people are like, this is back at 127, 128. I'm taking some chips off the table. So that's
you want to know why, though? This market right now just loves it when you get the momentum going in one direction. And this is why I don't want to short it here. Normal markets, I would say, you got a wall of resistance there. But look what Tesla did yesterday. Tesla opened up right at that resistance of 329, 330, and it did not look back. It just kept rallying and rallying. And now it closes, right under, 350, and gets up to 349.99. Funny how those big whole numbers work, but it's a couple dollars off it this morning. But it gets a kickstart at 350. It's probably taking it out. It's probably going to squeeze the shorts farther. And I mean, these are two different companies here, but these are two loved stocks, at least right now. And Take-Two is as well. And Hunter in the chat, interesting, that we are on expiration here for weeklies here, obviously today. And it's because it's a Friday. And he's saying maybe we should take a shot at some 128 calls expiring. You know what? I don't argue with that. This is the only time, and I've never been a fan of buying options. But I will tell you, the one time that I do buy options, and I used to do this a lot, was on the expiration days, just because the time value is very limited.
Zero. Yep.
Time value is going to be sucked out here this morning because the stock is obviously already traded up. Now, there'll be a little bit because it'll be a little bit of chop. But, I mean, if you could pick up, if the stock opens up 127.5, you could pick up the 128, let's say, at the open for like 50 cents or 70 cents. I mean, I like that risk reward. Because that thing could be like 132, 133. It really could do that. I don't know if it's going to do it, but that's maybe a better way to trade it than just to try to buy the stock long. What your risk is. I mean, if they're charging you on that 128, $3 off the hop and the stock's 127, then maybe it's not worth it. But if it's only 50 cents or if it's under $1, that's probably maybe a safer way to play it and maybe not a bad play. And I mean, if you could get it for like 50 cents, lever that up a little bit. I mean, there's not a bad strategy there, Hunter. So that's the only time I really, promote buying options is on that expiration day. And I've done that a lot of times. And I've even went as far, and I've talked about this before, is buying options like that are like a penny out of the money, like with 10 minutes to go. Because everybody thinks at 4 o'clock they're worthless, but people, 99% of people don't realize, hey, I can trade the stock against just because the option's closed doesn't mean I can't exercise the stock still or the option still, and I can throw out an after hours offer. So if I had, like, let's just say hypothetically, on Take-Two, I had the 128 calls. The stock closed at 127.90 at 4 o'clock. Everybody would be like, oh, yeah, I'm safe on that. Well, you know what? Not necessarily, because maybe you get an after hours upgrade. Maybe you get a pop after hours. I could throw out like 128.50 sell short order. I could execute on that, immediately exercise my 128 option and book 50 cents. Then somebody comes in on Monday. They're like, how did I get exercise on option that was out of the money? Well, you can exercise any option. You can even exercise them out of the money, even if it hypothetically closed out of the money. Because I shorted 128.50, I could exercise my 128 call, book 50 cents. Great way to play it.
I'm a nickel bid for the 128 puts.
I'll do that too. You're a contrarian. You just got done telling me yesterday. What did you say you were going to write on your desk? What did you say?
The trend
you already forgot.
I do. I forgot to take my pill this morning. I just want to.
We had this conversation yesterday. What did you say you were going to write on your desk?
The trend is your friend. The trend
is your friend. And in this market, the momentum starts going in one direction on a given stock. It continues a lot of times. Sometimes you get reversals. It's not always going to be the case. But, I mean, when you get the story and they're squeezing the hell out of Tesla and it's coming back here, I mean, it trends your friend. I mean, that W, the same thing yesterday, down $10, turn in the pre-market. And it never looked back. It just kept going. And you know what? It had turned. And if you would come in at, looking at it 104 and not realizing that it already rallied 13 points, you think you're going with the trend by the stock being down 3, but you were going dead set against it because you did not take into account the pre-market action. So the short-term trends are your friend there too. And, it's very important to, consider, what their overall market is doing. Fade trade works to a certain extent, maybe in a little longer time horizon, it's worked very well. But as day trades, it still hasn't been working that well. Certain stocks, maybe, but I think a stock like Take-Two, if you're trying to fade it, I feel like you're maybe on the wrong side. I think it could take out the 128. I think it could see 130 here today. I'm going slow.
Oh, okay. No beer bet. I lost a beer bet on Tesla, and I just wanted to
yesterday, and just because we said this and we didn't say this, I said I think Tesla can see 340. This was when the stock was 328, and you're like, I will take 316 to 340. I was like, sold for a beer. We were just doing it for a beer. Saw 349. I mean, all I did was go with the momentum there. It seems like it's the easier trade once they get going in one direction, not fighting that tape. Spinner knows. Like, I mean, you get going and this ball get rolling. I mean, look even what those, the IQ and the everything else did before those trends broke. There was so much people trying to fade those. I mean, once it gets going, it's hard. And then it started going down and it's been hard. People have been trying to buy those things all the way down, but the trend's broken and it's been moving down. I mean, yes, it's found some support here now, but for the last month, if you've been trying to buy BILI or SOGO, trying to call the bottom on it, they've just continued lower. So it's like they go one way, ball starts going the other way. It's hard to turn it around.
Oh boy! And now they're just sitting right near the lows here. So that's not a good. Yeah, they had their runs. Boy, that $30 in IQ looks important. All right, more earnings here. As Mr. Israel, where do you want to go next?
Well, we never did ATVI, so let's go with Activision Blizzard. They reported yesterday as well after the bell. 41 cents versus a 36-cent estimate. Sales 1.385 versus 1.39 billion dollars. So just missed on that number, but it beat on the EPS. They are also raising their guidance for the fiscal year. The EPS and the sales guidance both raised.
I mean, you look at this and it's funny. ATVI gets hit on their numbers. Then Take-Two reports and they start buying the ATVI. You can see right, at the, when Take-Two took off $10 when it came out of the halt because they halted Take-Two, Activision Blizzard was around 71.50 and they just started buying it. And they bought it all the way up to scratch. So it's amazing how, their own report they didn't like, but Take-Two reported good. It's like, okay, we'll buy Activision Blizzard anyways. Maybe it's the pairs traders, maybe it's whatever, but they came in buying with hand over fist when the thing was at 71.50 after those Take-Two numbers, and they bought it all the way up. Within like 5 minutes, it was back to scratch. You can see the big spike down, and then the big spike back up. And that was all because of Take-Two. It was down significantly, traded down to that 71.50 low on the initial spike, and it hung out there for a couple minutes. And then Take-Two came out, and it was blast off for EA Sports too. And I mean, blast off to a certain extent. It got the 2.5 points of losses back, but it got it back in like 3-4 minutes, and that was all thanks to Take-Two.
Yeah, boy, if you're pair trading this one, you're in a world of hurt today, or you could have a
it depends where you put it on.
Yeah. Well, it depends, where you have the spread. Man, you might as well be trading these stocks outright with the way that the divergence here. But Dennis talked about.
Let's talk. Okay, I wanted to say another point on this too. Pairs, if you're just flat out got a pair going in to an earnings, I'm a pairs trader. I trade it all the time. You've got to hit it harder on certain ones. So if I'm pair trading a stock that's going into earnings against another stock, you got to go 3-4 times the one that isn't, going. And that's how I would do it. So let's just say hypothetically, you've got, you would have, let's set this up. So, and you're never going to do a pair trade against two stocks going into earnings. You would use electronic arts. So if I was like pair trading Take-Two and, I was looking at it before going into the report, I would probably buy 3 to 4 times as much EA Sports as I would be short Take-Two. So you have to now multiply the EA Sports, which is up 1.8% times 4, because I would probably have 4 times as much, times like 7-8%. So you would still be down on that trade, but it wouldn't be nearly as bad. If you're pair trading stuff and putting it 1-to-1 and one stock is going to earnings report, you're not doing it right. So you've got to hit it heavier, the one that's not going to these. So if there's going to be a sympathy move will typically move, depending on the stock, depending on the sector. A bank will move like sometimes half of it. But some of these smaller ones move like 20 to 30% of the move, tops. So I would say you got to pick up 4 or 5 times as much as the one if you're hedging that way. But I don't suggest taking any stock into earnings reports because you have the wild card of what's going on. But if you want to hedge it, you got to hit it way harder. And I think the smart pairs traders do. So I would imagine, the ones that are really savvy probably aren't as much a hurt as you think they are.
Okay. All right. For this stock, staying green, getting green and staying green is the important thing. Close at the high of the session, 74.06, 74.16 high. So there you go. There's your key. Pre-market low, way down here at 71 and a quarter. The recent low of the move, 71.79. Perhaps find buyers under 72 if we get there in ATVI. SPOO's leaking again here, up only $1.50, 28.30. I think a little bit of the tariff talk taking the SPOOs off their highs this morning.
SHAK earnings, SHAK, they reported last night. Stock got whipped. It's starting to come on the comeback trail. I look at that short interest. I think I'm just going from my memory. It was over 25%. You think, how far can the stock really fall when there's this many people shorted and they've been getting killed? They want to come back and probably bring it in. So this is going to be the same story. I don't know if it's going to squeeze the shorts because the report wasn't great, but it's hard to really knock a stock with that high of short interest down on an earnings event because there's so many shorts people who are short who are looking to cover, and those become buyers who actually stop the stock from falling. The one thing, and people don't consider this, when you have an earnings report and you have a stock, that is a low short interest and it just flat out misses, who's buying? Who's putting their bid out there? Not a lot of people, because, if you put your bid out there and you get run over, you get killed. When you have a high short interest, you have people putting bids out there. Who are the people putting the bids out there? The people who are short who are trying to bring it in. Those bids start to lend support to the price, and then all of a sudden you get some penny hopping and you get some actual, you get some liquidity on the buy side in the book. And then, the stock stops going down. That's why it's difficult on an event for a stock that has a high short interest to really get whipped, because those guys will just come in with their bids and they start to lend support to the stock. So anyway, SHAK is down. You could say, what are you talking about? It's down 4%. But I mean, this is a stock, that's wild. It could be down $7-8 on this report if it wasn't have such a high short interest. Give us a number, Spencer. Let's go.
The short interest, by the way, on SHAK is I have 31, a little over 31%. But
so high. Okay,
yeah,
I was going for my memory. So 31%.
So
I mean, there's all those people that are looking. They've been getting killed in this thing probably for months. The thing comes in a little bit. They're looking to cover. They're looking to cut those losses and get the hell out.
So the Q2 numbers were fine. I think it was the guidance is why they're hitting it. Q2 EPS 29 cents versus an 18-cent estimate. Sales 116 versus 110 million dollars, just under 111 million dollars. So beats there, but as far as the fiscal year is concerned, the sales guidance came in light. 446 to 450 million is the sales range they gave for the year. 452 was the estimate. Comps for the year flat to up 1%.
I mean, this story doesn't sound good to me at all, but it doesn't matter with that short interest. So it's a hard. I've tried to short this stock, but I'm like, you're with everybody else, so it's difficult to do. Fundamentally, this makes zero sense to me. I mean, the comps aren't growing. I mean, this is, and I go in there, it's $15 for a burger and fries. It doesn't even make sense at all. Fundamentally, it's a sell, but that doesn't matter. That doesn't matter in this market. And why am I not selling it short? Because everybody else is short too, and the story is still there. So it's difficult for the stock to go down. I don't think it's going to whoosh down. Does it deserve to be a $55 or 50? I think so, but I don't think it's going there because there's too many damn people short at 31%. So they're going to come in and buy it. And that's why actually I played it from the long side last night. I was like, I can't believe this. I was saying to my buddy, but I'm actually buying this dip in SHAK, and I bought it at $60 last night. I've already flipped it out. I just sold it at 61.50. I rebought in the 60 handle, and I flipped it out here again in the 61s. Now it's having a little trouble here at 61.50, which is why I keep flipping it out. But I'm biased to buy the dip on this. And if, fundamentally, I got, remember that show, Herman's Head? Do you remember that show? I have this stuff happen to me all the time. Spencer, Joel, do you remember the show, Herman's Head?
No.
It was on Fox, and it was on for a couple seasons. And there's like 4 voices in his head. There was like the voice of reason. There's like the lust voice, which just wants, to eat, to do whatever, and then there's like the nervous, the voice and that. Well, I always have these voices in my head. I always think about Herman's Head. And if anybody in the chat remembers that, I get the voice of reason on me says, don't buy SHAK. What are you doing? But, the voice of like, what's going on, of rational thought, says, well, there's a lot of people short this thing and they're going to try to bring it in. I think there's a trade here on the long side. So I have this, conflict going on in my head. But anyways, the voice went last night that was saying that I think, that the shorts got to bring this in. I think it could go higher because of that. So I'm actually biased to buy this thing on the pullbacks here. Now at 9:30, we'll see what happens when the real volume comes in. But buy the dippers are in here, and I think they're all short.
And boy, someone thought they had a memo yesterday. The stock ran into the report, closed near the high of the session at 63.94. Off the headline report, it spiked to 66, 62, and then fell all the way down to 58.90. I think Dennis has a good point here. $60 was your low, 59.75 on July 31st. That's $1.50 away. I don't know if this is going to pull like a Wayfair or something, but have to agree with Dennis's scenario. And actually, if you're looking at a replay of yesterday, we're opening at yesterday's low at 61.50. So a little bit of a replay here. Keep an eye on that 61.50, get above and hold it, and this thing may get some of these losses back.
Jumping over just to earnings from this morning here. Let's go Groupon. Let's go AIG from last night. I missed AIG.
Ooh, AIG's getting hit.
Yeah,
okay.
It's coming back, but yeah, it's getting hit.
AIG with the Q2 EPS $1.05 versus $1.21 estimate. I don't have the sales number, but the EPS was a big miss.
Big miss. It seems like AIG misses every time, doesn't it? Doesn't seem like they miss every quarter and get hit. I don't know. I'm having deja vu here, or it feels like they miss all the time. I have this in my long-term investment portfolio. I've had it in there for years. I'm in from like $32. I'm probably sticking with it. But
AIG has missed. A trade, they have missed on the EPS. What's that? 4 quarters.
It's a trade just to sell it ahead of the report. It's almost every time.
They've missed on the EPS 4 quarters in a row, and
I knew it.
And 6 of the last 8. Oh, I'm sorry. 8 of the last 11. No, 13. 9 of the last 13 quarters they've missed on the EPS. 9
of the last 13. They just miss. They need to start guiding better because they always miss their numbers. And you can see what happened. So what's interesting? You see what happened back in May. It goes from $55 all the way down to under 50. Comes back in like 3-4 days, and look at it a month later and gets all the losses back. It always seems like it misses, but it always seems like the smart money is buying the dip on this one too. So not going to argue with it. I mean, it's come back. It's not big as the whoosh as it was last night. It's off the lows, but when it got under 50, whatever, it got down
50, to 51.80.
It got down 51.80. It was probably just a buy because it seems like buy the dip on AIG no matter what, even when they miss. But they miss every quarter. It's ridiculous. It's like clockwork. So that's what we got to start doing, is just figuring out these trends ahead of time. Sell it ahead of the report. Anyway, I'm going to let you guys talk AIG. I got to get ready for this jobs number here because we could move on it. I got some bank positions there, so we'll let you guys go. I will be back with you after the jobs, and Joel and Spencer are taking it from here.
Okay. Dennis is out of roll today. Dennis is in a fast market here, folks. Let's see. Your pre-market low is 51.80. Since you hit that level, you have found a little bit of resistance at 53.45. I see some lows here now that we bounced off that 51.80. I'm going to step up my support. I'll look at 52.53 as a potential support area. You had that as a low on July 23rd. That's a matching low at 52.69. In order to fill the gap from yesterday, yesterday's low 54.36. May find a few sellers there. Callaway Golf. Let's go to the Google YouTube chat. Spencer, you got news or earnings on Callaway?
Yeah, I have earnings from yesterday. We'll do that real fast before the number. The Q2 EPS 63 cents versus 47 cents. Sales 396 versus $371 million. So they beat on both. It's the Q2 numbers. The Q3 EPS guidance came in higher by a few cents. The sales guidance came in higher by about $20 million. The EPS guidance for the fiscal year was also very good.
Okay, looks like a little bit of a breakout here. Callaway Golf, pre-market high, 21.35. Since you had a pair of highs at 1975, 1976, I'd look to try and buy that area on a pullback. Spencer, 25 numbers to the jobs report. Do you want to give a quick preview?
Sure. We're looking for a non-farm payroll estimate of 193,000 jobs. Last month, remember the prior reading was 213,000. Unemployment rates expected to decline to 3.9% from the 4% reading last month. So 193 on the non-farm, 3.9% on the unemployment is what we are expecting. And are we out yet? Doesn't look like it. Close.
Yep, it is. Jobs report imminent here. We are past 8:30. They're jumping the gun here in the SPOOs. We had a slight dip, but like everything else, the buy the dippers are there. That little spike in the SPOOs. Whoo! How did we get? You had to have been quick. Went down to 26 even here, and now you are getting a little bit of a pop. That was really fast. You would have had to have a bid out there. At 28, you wouldn't have gotten down at 26 here, but right back up here, July jobs plus 157,000. Spencer, you got more details on that.
Non-farm payroll number for July, 157 again, 193 was the estimate. Remember the prior reading was 213,000. Unemployment rate in line with the 3.9% estimate. That is what it was last month.
We're not moving now. We had to spike down to 26. Someone got a little happy on that one. Now you're
Holy
back
crickets.
up. Yeah. Dennis, what did you do?
Bank's down just slightly on it, but I mean, it's so slight, it's hard to even notice. TLT didn't even budge. I often look at the TLT on it because you'll see that spike one way or another. It gives you a pretty good tell on which way the banks are going to go. I mean, we have not even moved. I mean, now we're starting to leak a little bit higher on the S&P, so maybe I should have stayed trading here for a second, but it's quiet. It's very quiet. So banks just kind of hanging out. Usually it's the banks that move the most on, which is why I naturally go to those for the most action. But I tell you, just quiet.
Okay. All right. Just battling here at 28.30, and that's where it looks like our battle's going to be. 28.30.50 was your after hours close. Your close when the cash closed at 4 o'clock, the SPOOs closed at 4:15 is 28.50. Your little pop up there was the 32.75. So still digesting the report here. Let's see if we can hold these gains up $1.25. Keeping an eye on 28.50. That was your closing price from yesterday.
Can we do CBS before we go take a break and go to Joe?
Do it.
I'm just very annoyed. I'm very annoyed with this. So they had earnings yesterday after the bell. Q2 EPS $1.12, beat by a penny. Sales 3.46 versus, which is in line with the estimate, $3.46 billion. So in line Q2 numbers, and they had the conference call. Moonves was on the call, and I'm blown away that the analysts, not a single one of them, asked about his future at the company. They said prior to the call, CBS did, that the scope would be limited to the quarterly results. But I don't know how you can be an analyst and your job is to be forward-looking, and you don't even ask about whether the CEO will be at the company in the future. I
guess you could ask that. Like, they kind of said that they wouldn't talk about any of that stuff off the hop.
That affects the business and the stock.
Everything.
I don't know how
the call was basically useless. As soon as they said that in the first, so I had the call. It was on CNBC too. As soon as they said that we're not going to talk about any of this stuff, I'm like, well, what the hell? This is pointless to listen to any of this now because, the business, how they did this quarter is meaningless going forward.
And I don't
Until we know who the hell the CEO is going to be.
Exactly.
Like, if it's going to be you or are you sticking around, what's going on here? We know your personal brand is tarnished big time here now. And the question is, are you going to bring down the ship with you and tarnish the CBS brand along with it? So it sounds like kind of to me like he is, but because, he was on the call addressing lots of questions off the hop, but they said they would address nothing, obviously, about the allegations that are out there. So the whole call was useless as soon as he said that in the first 30 seconds.
I just don't know how you can be a self-respecting analyst. Your job is to look into the future, and you don't even ask about the biggest thing in the future, which is
they told you couldn't ask, but maybe some of those analysts should have just asked anyways. Is that what you're saying?
Yes. Anyway,
I kind of agree with you.
I got a number that I really like here. Now, CBS traded down 48 cents. You have a triple top at 53, 297, 3 even, 296, trading down in the pre-market. Absolutely no upside on the stock until you get bust above 53. And we are 80 cents away from that. If you're looking for support in this issue, I like $51. When the initial news came out about Mr. Moonves, he went down to 50.91. You backed it up the following day with a low at 51.01. So 51 to 53. But, with this cloud over move his head and, what's going to happen with this, it's a hard stock to own. And,
I mean, it worked with Win. Well, it worked with Win if you got it quickly. Well, yeah, because Win's come back down on its own bad fundamentals. But, I mean, if you were buying the initial dip down to 160, it ran up to 200 afterwards. So maybe you have another pop back here. So I tend to think that these things, are buys on these pullbacks when you have, problems like this. But long term, we don't know what the implications are going to be because we don't know if it's going to be the CEO. There's a lot of unknowns. But there's great support down there at 50. So, I mean, 50, call 51 the last couple of days, but look at 50 back in May and June. I mean, you got some support below. So I ain't coming here selling it.
Spoon's leaking a little bit, down half a point, 28.28, and it's time for our guest.
Yes, it is Joe Saluzzi, partner of Themis Trading. We'll be right back in a moment with Joe. Welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, and Dennis Dick, now joined by Joe Saluzzi, partner and co-founder of Themis Trading, market structure extraordinaire. Joe, how's it going today?
I'm doing great. Thanks, guys. Thanks for having me on. How you guys doing?
We're doing all right.
We're doing good. I guess Spencer's throwing it right to me right away.
I was gonna throw it right to you.
He's already yelling at me because I'm not in the little message board that's behind the scenes to talk about. So we get all discombobulated here. But Joe, you've been talking and tweeting a lot about Bitcoin and the Bitcoin ETF, and I want to start the topics just right there. I kind of agree with everything you're saying, and when I follow you on the Twitter stream there, there's obviously some concerns here that you have. Just talk about why you are on the side of the SEC on not approving the Bitcoin ETF, at least at this time.
Sure. And I think the SEC's main point, which I agree with, is that the underlying market, the spot markets are unregulated and are filled pretty much right now with manipulation and fraud. And I think that's been proven many times by the stories that we're reading about hacks and various, problems at these exchanges. Spoofing, layering, all sorts of manipulation that could be going on. And I don't want to get into the whole Tether story, which is an enormous story about how, this could be, Bitcoin itself could be being pumped and dumped, basically. But the bottom line is I don't even care about all. I don't care what goes on in the Bitcoin spot market because that's not my markets, right? I don't focus necessarily there. I focus on the equity markets. And if you're putting an ETF into the market, well, now that's in my marketplace. And if this ETF is based on a market that is basically filled with manipulation, fraud, and has no regulatory surveillance from a central regulator, well, then it makes no sense to put it into our markets and have someone, let's just say, in the middle of America, stick something like this into their portfolio who doesn't have the risk tolerance of a product that has really, is still the Wild West, that hasn't matured nowhere near the maturity level that it needs to go. So if it ever gets to the point where they say, okay, we're going to have, 10 exchange, if there was only 10 exchange, whatever it may be, if somehow they put a cross-regulatory system in and the SEC gets comfortable with it, you know what? Then I'm comfortable with it. But at this point, the SEC has told these guys, and this is what really bothers me, time and time again, the SEC keeps coming back saying, no, we're not going to improve this until you get some sort of regulatory system in place. And yet, what do? They keep bogging down the SEC with more proposals, the same proposals, from the same guys, the Winklevoss twins, the SolidX guys, being supported by the SIBO and NYSE ARCA, and they're just bogging it down. They're trying to beat the SEC down, and they're trying to hope that the public comes out and says, no, we want this Bitcoin ETF. But the SEC is right. And remember, one of the main jobs of the SEC is to protect investors, right? That's one of their missions, and they're doing the right thing right now. Okay, with that said, like I said, if they ever get it together, I don't have a problem with it, but we've got a long way before that surveillance gets there.
I mean, how do you really regulate it? I mean, we have enough trouble regulating our own markets because some of that stuff that you just talked about happens in the regular U.S. markets, and obviously there's, repercussions there. But I just think like this is traded everywhere in the world. And, places where it's out of the SEC's jurisdiction. I mean, you could have this manipulation happening in countries that, they have no say in whatsoever. And maybe, their governments don't care or allowing, the manipulation to happen. I mean, that's the one biggest issue, I think, is that it's traded everywhere. And this manipulation that, could potentially be happening, which I believe is. I mean, if there's manipulation in the U.S. market, there's probably a lot of manipulation going on in the Wild West, like you said. How do you go ahead and regulate something that's traded everywhere?
The answer, I don't know. And I think that's why that's why some products aren't built for ETFs, right? They should not be ETFs for every product. You don't want to put an ETF on Beanie Baby trading, right? There's not for everything, okay? But for some reason, these guys, and listen, one of my main things that I've done in my life, I've always, follow the money, right? That's one of my rules. Follow the money, see where it's going, and you'll find really where the problems are. Well, who's supporting this? Who's going to make the money? Obviously, the market makers who are out there who are trying to arbitrage the ETF, if it ever comes, versus the underlying, they're going to make a ton of money. But also who's going to make a ton of money are the stock exchanges, the current stock exchanges, because they're the ones who are going to list these ETFs and reap tons of money from the ETF trading. Okay, so these guys are the ones who are pushing it, and they're pushing a product, like you just said, Dennis, it's got a long way to go from surveillance, and it probably will never happen. So they should be ashamed of themselves because they're out there putting their own self-interest, because they're public companies, in front of investor protection, which should be one of their models. But unfortunately, for-profit stock exchanges in this country have morphed into their own, business model, and they can care less about investors, it seems like.
I mean, that's an argument there, and we can take that into, going back to the equity markets here now. Maybe that's a good tangent to take us over to this access fee pilot that is now obviously looks like it's going to happen here. I think they're still ironing out all the details of it, but give us your thoughts here. We talked about this last time you were on to a certain extent. I've got mixed thoughts on it. I love the idea of an access fee pilot. I think it didn't go far enough, but give us your thoughts here on the access fee pilot.
Yeah, and I know your concerns, Dennis, and I agree. It would have been nice had we gone further, but I think you got to take this one in steps, because it's such an enormous, situation we got going. And for years and years, why do we name our book Broken Markets? Because the market broke many, many years ago when it comes to structural situations, why we're fragmented so much, why we have 13 stock exchanges and all of these off-exchange facilities. So we need to start to fix it. And I think the current SEC understands that. Jay Clayton understands it. Brett Redfern, the head of Division and Trading and Markets, understands it. We've got people in there now who not only understand the problems, but they're willing to do something about it. So I see the transaction fee pilot as a first step, not the only step, in fixing the fragmentation problems and fixing really the conflicts of interest at the broker or dealer side that are causing a lot of these problems. And once you start to fix the engine of the market, things will run better. Okay, things will be not as conflicted and so on. And the transaction fee pilot addresses a big portion of it, but like you said, not all of it. So the one part is obviously maker taker and how the model is set up, and there's rebates and there's access fees. And everyone agrees on the buy side, and many broker dealers agree that this has been a major problem in the markets for many, many years, and that the market doesn't need a system where you have to pay rebates to add liquidity. We don't need that. That's not necessary. But for some reason, the stock exchanges built a business model on this, and they make a lot of money attracting liquidity or trying to get – the way they make their money, stock exchanges, by the way, is not necessarily on a trade. They make their money from the data that's generated from the trade. So their revenue capture on a trade, let's just say, is on average 3 to 4 mils, very small per share. But the money that they're making is really from the data sales that are generated from these trades. Okay, but the bottom line here is the SEC said, you know what, we're going to test this. And we want to test it and change some of these things and put it in a no rebate bucket. All the letters that have been written by buy-side firms and institutions have been positive. NYSE comes out, and a couple of and SIBO and NASDAQ, they come out against it because why? It's against their business model, and they're going to lose money off of this. And then NYSE goes out and gets almost 40 public companies to support their stance. And these public companies, I believe, are blindly following the NYSE's lead, and they're looking at this analysis that NYSE put out saying that it would cost investors $1 billion, which is a joke, by the way. And I advise everybody to read an IEX post that they just put up yesterday on the Medium site. It's called Cracking the Pillars. Okay, and it's a really good piece written by Eric Stockland, Cracks in the Pillar, Eric Stockland and Stan Feldman. And they explain why NYSE's wrong. And it's not going to cost investors $1 billion. In fact, you could have saved money for investors. So unfortunately, public companies don't seem to understand the inner workings of the stock market. So I wish they would call me or call you, and we can explain to them how this thing really works. And before they write a letter supporting a NYSE stance, which is wrong, they should really investigate these things.
I mean, I'm all for simpler markets here, and and I can totally relate because as a professional trader, I know the retail trader, they sometimes give them bulk discounts and quotes, but as a pro, I have to subscribe to all these different exchanges for all these different quotes. So you got the ARCA book, and you got the NSDQ book, and I got to go. I have 3 different terminals where I'm getting ICE quotes from, and there's so much cost. I as a pro, and just as an individual trader trading at Bright Trading, I think I spend like $600 a month in quotes. It's like, and you all add all that up, and, we have 120 guys in our firm, probably all doing the same thing. We're one firm. I mean, there's so much money in the data. These are quotes that I got for free until like 2007. I got all this stuff for free. And now all of a sudden I have to cut a check for $600 a month just to have all the different quotes. So if it got simpler, and if we had like a club where I only had one exchange I had to subscribe quotes from, my expenses would drop dramatically.
Sure. So, the exchanges would have their business, and they're not going to allow that to happen. They have an entire lobbying force in D.C. making sure that doesn't happen. But what's funny about that, Dennis, is the stock exchanges will claim, well, hey, wait a second, it's competitive. There's a competitive pricing system out there. There's multiple exchanges, and if you don't want to buy my exchange data fee, you don't have to. Well, that's BS, okay? Because they know that, particularly the high-frequency trading and the market maker guys, they're gonna, and any broker-dealer for that matter, has to get you need to get in all of these quotes. It's monopoly pricing power because I have to buy their stuff. There's no choice for me. So if they say they're raising their rates from, up 10% next month, what am I going to do? Not take the data? So by them saying it's a competitive thing, that again, it is a, very... I don't want to call it a lie, but it's not true. Okay. So pricing power, by the way, Brett Redfern, again, the man I mentioned at the SEC, he's looking into this as well when it comes to market data pricing. This is going to be a big issue. And he actually tweeted the other day, or somebody tweeted, this winter will be a big issue. They're going to start looking at this even closer. So again, the SEC is looking at this. They're cracking down all the pieces of the puzzle that have been put together for many, many years. Reg ATS, by the way, they just passed a rule which is going to make the alternative trading systems expose more about what goes on inside their trading. What types of orders are there, what types of clients, and so on. Lots more information is going to be displayed or be required now from these ATSs, which is all good news. This is the thing Sal and I have been talking about for many, many years, and that the SEC never even touched because obviously they've been lobbied against them by the other firms, and now they're doing something. So if you ask me where the needle is on market structure reform, I'm extremely, extremely encouraged. Finally, we've gotten some really big headway here. And now here's the trick, but you got to be careful because as you turn the wheel, as you turn the dial, something else may pop up. So you always need to be vigilant. Market structure reformers, market structure observers, whatever you want to call us, we're always vigilant as to what is the next step. Okay, so these guys are really smart on the other side. The HFT guys make their billions. Somehow there was an article yesterday about a quant lab in the Wall Street Journal. These guys making tons and tons of money. Well, they're pretty smart guys. And they're going to adjust to the new rules. They're going to adjust to do different ways. So we need to be careful and we need to watch the next step. But like I said, I'm extremely encouraged. But
I mean, it's a good first step, so I can get on board with that. The one, and I just to finish, what I was Joe hinted at. I wish it would just address a little more of the off-exchange trading stuff because we have 40%, and the way I argue a little bit is I to a certain extent I like the maker-taker system only in the way that I can offer my stock on an inverted exchange and get a quicker fill. And I feel like, am I stepping ahead of the offer? I technically am, but I feel like my offers get stepped ahead all day long. So, so what happens is, I throw an offer out there, trade at my price, will get sub-penny, there'll be a sub-penny going in front of my price. Right. And it's a retail trader that's trying to buy my stock, but the off-exchange market maker is intercepting the order and taking that fill away from me. So by me offering a couple fractions of a cent better than the offer, on an inverted exchange, I get filled a little bit better. So our traders use the inverted exchange a lot. So we're actually not even looking to capture the rebate. I'm looking to get a quicker fill. I'm actually willing to pay. I'm willing to pay for a quicker fill.
Right, but you've adjusted your trading style to fit a distorted market based on a system based on rebates and ridiculous order routing schemes.
Yes.
If we can at least clean a lot of that up, I don't think you would have to go to the inverted exchanges if you start to get rid of the noise that's out there. We'll see that, and I agree with you. The ATS world, they're next. Okay. That will be, a trade out rule has been discussed. They've been talking about a trade out rule. It was part of the tick size pilot, which is ending in October. But, some people were saying that at least the stock exchanges were complaining, and they had a point here. If you're going to put a change in rebates and access fees, well, then how about we think about putting a trade out rule as well? It was just too much to do at once. But if you put that trade out rule out there and you're on the offer, they cannot trade on an offer exchange until they get through you, right? Which would be a good thing. That satisfies your problem there.
That's what it's supposed to work in hypothetical. And I supported the trade out rule since it was proposed back in 2010. It didn't really work and they tried it in kind of a different version of it. And the markets are completely different in Canada and Australia. They tried it didn't really work. But again, those market structures are completely different. It's not saying it wouldn't work over here. The one thing, and I see this happen all the time too, it's like they're always like 2 steps ahead of us. It's like if we get this trade out rule, I can just envision, well, they're going to join me on the offer. Now they're going to route it to their own offer. So because there's 12 different exchanges, so I throw out an offer bid at ARCA. Well, I'm going to get everybody joining me on NSDQ. And now when they get the order, they can route it to their own NSDQ to match my price that way. So I can already envision the scenario where they can get around that rule too. Isn't it funny how this works?
And they'll always be fast. And remember, they'll always be faster than you. They're spending all that money on technology that they're buying from the exchanges, right? So it's a tough game to play. That's just why, again, these HFT guys build mansions and then buy yachts and helicopters and everything else that they have down there. But this is, although that game has changed for them, right? A lot of competitions come along. It's tough, but again, these are pieces that we have to move. We can't do it all at once, I think. And I think by at least moving in the right direction here, the SEC is stating, hey, we are serious about this. And finally, by the way, when they finally get the consolidated audit trail, they can see, right? Or they can see a lot more than they can now, which is much more of a piecework where FINRA has to kind of, put all these pieces together. The SEC is now going to have this oversight where they can see if there's somebody manipulating markets. They could see if someone's screwing around. That's going to all help. All of these incremental changes will eventually, drive some of the bad guys out, change some of that. It may lower volume, which is not a bad thing, by the way, because as we know, volume is not liquidity, right? The volume is noise. There's lots of noise out there, but that's what the stock exchanges are desperately afraid of. The volume lowers and their data feeds are not as valuable, and then they make less money, right? So we'll see, is what I'm saying, but I think that we're going on the right path.
All right, that's enough market structure for one Friday. Joe Saluzzi.
Joe's good.
Joe, thanks so much for the time, man.
I'll go all day if you want.
Yeah, no, I don't think we do. Joe, have a good one.
We love market. I love market structure. I could go all day too, but I think a lot of our listeners then start to get lost in the market structure. But Joe is great at explaining stuff, so we love Joe.
Joe, thanks a lot.
And if they want, they could always look at our blog. We post a lot of this stuff.
Go read Joe's book.
We talk about
Joe's
topics.
book.
I mean, the book is 6 years old, and it's still timely.
Still is. Get in there.
We wrote that before that guy Michael Lewis wrote his book, by the way.
Joe's is better.
All right, Joe. Joe, have a good one. All right,
gentlemen, have a good weekend.
All right.
Take care. Thanks. Bye.
Back to the markets, guys. Where do you want to go?
Well, let's go. I just want to talk HMNY for a minute here because I want to give you some statistics here. And this stock is so ridiculous. Okay, so they reverse split the stock. When was the date of the reverse split? July 23rd?
I have to look it up. It was last
week.
Look it
up. I'm going to look it up in the background. I think it's July 23rd. So we're talking like 7 trading sessions ago, literally last week.
Tuesday the 24th?
Tuesday the 24th. So we're talking, 7 trading sessions ago. Last week, they reverse split the stock. It went up to $25. It is now 11 cents. It has lost 99.6% of its value since last Tuesday. That is absolutely crazy. And that's, just showing you this is a zero. It wants to go to zero. They reverse split it. If they bring it back down to zero here anyways, I mean, is it going to have these pops and can it, and have, little pops in between? Sure. But what I would just want to point out is people think, I'm buying 11-cent stock. What can I lose? You can lose all your money. And if you bought this stock last Tuesday, you lost all your money. If you bought this stock last Tuesday on the reverse split and you lost 99.6%, the person who bought the all-time high, which now adjusted, is $9,714. You know how much the person that bought at $9,714 lost? They lost 99.99999%. So they only lost 0.3333% more than the person who bought it last week. So basically, the person who bought it last week is just as dumb as the person who bought it at $9,714. They both lost all their money. And you know what? If you're buying this thing at 11 cents here today, what can you lose? You can lose all your money. And is it going to do another reverse split? Maybe. And maybe it's going to do the same damn thing. You can't find a locate to short it. I mean, but the one risk you have is, can it go from 11 cents to 30 cents in a day? Sure, it can. It can do anything like that. But you stick this in your, trading or investment portfolio and look at it a month later, it seems like you'll lose 99% of your money. So tough trading this on the long side here. And if you have a locator, if you've been able to short it, it's been good. But I mean, there is going to be these squeezes in here that are going to burn you too. So anyways, incredible that it can lose 99.6% in a week.
Dennis, everyone wants to know if you're going to buy this stock for a penny. Everyone loves that. I get
show.
Every day. Everyone they send I will buy this stock. Are you going to buy it for a penny?
I don't want. Well, I guess it's 11 cents, but reverse split. So, anyways, am I going to get a chance to buy it for a penny? Probably not, because they're going to reverse split it before I'm going to have a chance to buy it for a penny again.
I wonder.
But no, I'm absolutely not buying HMNY. This is worth nothing. Is it going to have pops? Can it go from 11 cents to 30 cents or 50 cents? One day, sure, it's going to do that. It's going to burn some people who are playing on the short side. But I mean, the shorts have made a lot of money in this thing. It's incredible they can have a reverse split and lose 99.6%. In 7 trading sessions. That's incredible.
All right. Can we talk about dry ships here for a second? Even though we said we never talk about it again on the show, it's holding $5.
Yeah, we thought it was having dry ships a million times. So it's holding. You know what? They haven't done any of that death spiral financing in a while. So it's held up. Now, the question is, are they going to need to do another round of death spiral financing? We've had Jeff Goldman on who had explained it perfectly. You can Google death spiral financing, understand what it is, but basically they just print, they're just, selling equity, and then they reverse split it out, and people who, have options to basically sell it out. So it's the only way some of these companies can obtain financing, but it just burns equity holders. That's the bottom line. So dry ships hasn't done that for a while. That's why the stock's held up. They do another round of death spiral financing, and the thing will, and they do a reverse split, the thing will go up and then collapse. So it's all a matter of, you don't want to own stocks that are doing death spiral financing. That's the bottom line. If you see your stock and they start doing death spiral financing, that death is the value of the equity in the company. So that's the stockholders that are dying on that. You don't want to participate in that.
All right. So,
unless you're part of the convertible and you're actually loaning the money.
Someone in the chat a while ago asked if we can look at AMCX. So let's do that. They had earnings yesterday morning.
This is what I still have in my investment portfolio. I sold half of it up at 66, which I would have sold it all because I just thought it got overdone. I've speculated for a while. I still think AMCX is a potential takeout target. I've speculated this for a long time. That's why I have my investment portfolio. I sold half of it just because it was, everybody else started speculating in June too. And it got ridiculous when it got up to $69. It just got a little overdone. I thought when I was buying at 50, I thought somebody could take it up for 75 or 80. Well, I got up to 69 on speculation. So it was just overdone. Wish I would have sold it all. Did not sell it all. I held half. So I'm looking to rebuy that half. We get into the lower 50s. I don't know if we're going to get there. Content is still king. I think AMC Networks, they're The Walking Dead. Obviously, they're going to have to find some other content because they can't just keep milking The Walking Dead because that series is starting to get a little bit old and maybe long in the tooth. But, they make other series too. They've come out with other stuff before. Breaking Bad, I believe, was an AMC series. So they've come out with some good stuff. They have good writers over there. It's a cheap content play. I mean, I think it's $3 billion or $3.5 billion. So I think eventually somebody could scoop them up just because content is king.
Okay, mixed report, trading down here. Street kind of leaning the right way into this one. Not a lot of prints. I see a 58.13 print on negligible volume. So first of all, you want to see this get green on the session. 58.48 was the close from yesterday. 56.82. That was your low from yesterday. You also had another low at 56.68. So you get under 57 here. You may find some buyers in AMCX. SPOO's turned red on the session here, just by a little bit, down a bucket, 28.27.50. So we'll see how we hold up here in the next minute or so.
This is a really hard market. When I'm looking at everything here, I really don't see a lot of stocks taking off. Food stocks are hot today. It's the only thing I see that's hot. That's off the Kraft Heinz earnings, although Kraft Heinz has just
it gave it all back.
What happened?
It went back down to 60.
Well, obviously, Joel, what happened with news? It went back down to 60. When we know it went back down to 60, what happened? It was just at $64. What had just happened? What did they announce? I want to sell this thing. I should have been.
They must have said something on their conference call here or something. I don't know.
I was just going to say the only thing that's hot is Kraft Heinz, and that's not hot anymore either. So, anyways, wow, that's crazy. It was just $64. It's now $60. Kind of makes me want to throw up a little bit because I was actually ringing the register up at 63, 64 if we were going to open up there at 9:30. I guess I should have been hedging it.
Okay.
Wow.
All right.
I don't know.
Going in it, we got we're at 9 o'clock hour here, Spencer. You wanna wrap things up?
I was just kind of scouring for some Kraft Heinz headlines, and
gotta be something they just said that's lost $3.
I don't know. This is interesting. All right, I'm gonna keep an eye on this one in the next few minutes, see if I can track something down. But that's it for
third quarter. Justin, this is coming from Dominic Chu, CNBC.
Okay.
He just tweeted this out. It says third quarter adjusted profit is likely to be down more than what they saw in the first half of last year. So they see going forward, the guidance is no good. Okay. That's why it's come off significantly from those highs. Starting to come back a little bit here, but the guidance is no good.
All right. That's going to wrap it up for us today. Thanks to our guest, Joe Saluzzi. Thanks to everyone who tuned in and was in our chat rooms on YouTube and premarket.benzinga.com. Quick reminder that all the information on today's show is for informational purposes only and not meant to be investing advice. If you want to catch our podcast or any replay of any show ever, you can do so on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play, or go to youtube.com/Benzinga TV. Hope everyone had a good week. Hope you have a good weekend, and I hope you join us again on Monday. Have a good one.